Well, hi everyone. Thank you very much, ETHMilan, for giving us the opportunity to moderate the panel. I'm Mattia Mrvosevic. I'm one of the co-founders and general partner at Eterna Capital, which is a London-based venture capital firm. We team across London, San Francisco, and Montreal. We invest specifically in Web3 companies for around 5 years now. And we invest quite early stage, so from pre-seed to Series A. So today, I'm very excited to moderate this panel with some of the best institutions in Web3 and in general. So why don't we start maybe with a quick round of introductions from the panelists? Thank you.
All right. Ciao a tutti. My name is Kat, and I look after institutional business development at Gemini. We are a centralized exchange and custodian, and we've been serving retail and institutional clients since 2013. My own background is TradFi. I started my career on the trading floor of a bulge bracket investment bank, where I gained experience in multiple asset classes, ranging from equities to fixed income and structured products. And then I made a transition into fintech and then crypto. My crypto journey actually started back in 2018 when my team launched one of the first BTC derivative products, which was cash settled, and it allowed institutional investors to get access and participation in this asset class without actually touching any physical underlying. And I am very fortunate to be here and to mention that I played my own part in the evolution of DeFi and acceptance of DeFi by institutions as early as the DeFi summer of 2020.
Hi everyone, Michela Silvestri here from Binance Institutional. I lead the business unit in Europe, specifically covering Italy. Great to be sharing the stage with two of our partners already, Sygnum Bank and Eterna Capital has been working with us as well in the past. My journey started back in around 2019. TradFi for 5 years. After that, transitioned to crypto and never looked back. My background, more than DeFi, is strongly on trading, institutional trading has always been. I started my journey in London with a prop firm, then sales director for Huobi Global, the exchange, and now Binance. Looking forward for this panel, as I do think that Binance has a strong approach to DeFi in the next few months, and very excited to know what they can bring to the table as well. Sharing this with you in a few minutes. Anything else, happy to connect. We work with the biggest institutional clients out there, hedge funds, market makers, quant funds, VCs, family offices, etc.
Yeah, good afternoon. My name is Markus. I'm working for Sygnum Bank in Switzerland. We're a Swiss and Singapore-based financial services company with the banking license in Switzerland and financial services licensing in Singapore and Abu Dhabi. What my role is, I'm heading the portfolio management. With that, I'm overseeing a set of different investment strategies within crypto. We're crypto-focused only, so we're doing from crypto yield to direct token investment and venture capital across the board, but also some hedge fund type of strategies that we invest. Besides that, I'm also involved in some of the strategic initiatives that we're doing to bring more crypto and all the value that crypto brings to investors in a way that is both including regulatory
some institutional players to actually play with DeFi and start using it. Markus and I have been talking for a long time, and now we're actually doing something together, which is something we will talk about in this panel as well. And yeah, excited to be here and share my insights on how DeFi can be institutional grade for, I guess, for the first time and see things happening.
Hello, good afternoon. Thank you for having us here. I'm happy to see you all. I'm Fabio Pezzotti, the founder of Iconium Blockchain Ventures. We believe we are for sure the oldest and the largest VC firm, crypto VC firm in Italy. We have been investing since 2018, 80 projects invested. We invest both in private and seed rounds as well as in liquid market. We're very operational as a VC, also as we do operate in the DeFi world. We provide liquidity. Talking about my background, I've been in crypto since 2016. Before, I've been a Web2 entrepreneur since 1998, I guess. I saw the boom and bust of the .com, and I've seen already several boom and bust in the crypto, but I think the future is bright, and hopefully we'll be able all together to bring this to the next level. Thank you.
Yeah, thank you very much, everyone. Decentralized finance as a concept and also a set of tools, technologically speaking, has been around for a couple of years and more. And institutions started to really look into it pretty much, I would say, at day one. So maybe, Ekaterina, it would be nice to understand what is the current state of institutional finance and DeFi and adoption, and also how has it evolved since the start, basically. Yeah.
Well, I am very fortunate enough to mention that I briefly participated in this whole wave of institutional adoption of DeFi as early as the DeFi Summer of 2020. And I'll share that story, and then I'll point out a couple of trends which I'm seeing, although now I work for a centralized exchange. So back in 2020, my role was head of product at Copper, the crypto custodian. I was focused on building infrastructure for various institutional players to trade digital assets exactly the same way they trade all the other asset classes. I was focusing on clearing, settlement, collateral management, and that was the time when I was asked by my clients, how can I access DeFi ecosystem safely? Because the only tool that was available back then was MetaMask. So that was the time when Copper Connect was born. And it consisted of a browser extension, very similar to MetaMask. But I took this design decision where it was connected to MPC wallets, which were institutional grade. And that was the first iteration of such product. A few months later, Fireblocks came up with their product, and it was called Wallet Connect. And I think it was sort of an inspiration for them. And then in 2021, MetaMask released their own MetaMask institutional product. And for me, it was very rewarding to see this evolution. There are two trends that I'd like to point out that now I work for a centralized exchange. Firstly, we see that many industry professionals agree that DeFi solutions are more appropriate for certain purposes than the centralized alternatives. For example, say New York DFS most recently have published new guidelines on token listing and delisting for exchanges. So us as a centralized exchange, we are even under more pressure from the regulators to be even more selective about the projects that we work with. Hence, we can see that a lot of new projects are doing their initial token listings at decentralized venues to gauge interest from clients, etc. Second point I'd like to mention is post the FTX collapse, we've seen this massive deleveraging from the institutional side. We've seen big institutional clients leaving centralized exchanges and capital flooding into decentralized exchanges because of their perceived lower counterparty risk. And actually, at some point, we saw that the Uniswap trading volume surpassed the Coinbase's. So it seems like there is acceptance that the DeFi ecosystem is very useful, it's viable, it's a great source of innovation. However, there are still lots of challenges that we'll need to overcome, and I'll mention that later.
Thank you very much, Ekaterina. That's very interesting, and I think it would be interesting to understand the same point of view from different, let's say, stakeholders. So maybe like, you know, Markus from Sygnum Bank, like from your perspective, how has this evolved, yeah, in the past? Yeah.
Yeah. So maybe look, if we're talking about institutions, I think we need to differentiate, and I think it's important to understand where the money comes from that goes into DeFi now, and what is still on the sideline. And I think what really goes into DeFi is, you know, kind of crypto native money. And you see also a lot of hedge funds and prop trading shops that really use that. We invest into that through a fund-of-fund structure because we can't do it. And I think that's also a bit showing what the limitations for other types of institutional investors are. I think if you're talking about banks, if you're talking about large-scale asset managers, if you're talking about pension funds and so on, they are not even thinking about doing something like that because they can't just do it because of regulatory reasons, number one, but also because of risk appetite. They have a different level of risk appetite, and therefore they are not using yet the value added compared to maybe traditional finance. But also I think there are some ecosystem inherent limitations still, which is about volume, which is about price efficiency and so on, which just do not point to the fact that DeFi is better for everything, but just for parts already. And I maybe sound like I'm not pro DeFi, but that's not the case. I just try to be very realistic and make sure that we point to the actual issues why institutions don't go to DeFi and get solutions better than having some sort of ideal thinking of how it should be, but it's just not matching the reality. That's a bit what I see. And we're trying to push as hard as we can to be a regulated, fully licensed bank, but still engage with, you know, like staking, like on-chain asset management, proof of concepts, working on tokenization of assets to make the ecosystem and the DeFi space much more diverse and much more attractive for investors. We go into DeFi token investments. We do things on the venture capital side. We are providing liquidity through managers, third-party managers, and do things that really help bring more volume to the space. But you know, it's still a fight to really move the big money there.
Thank you, Markus. I think it would be also nice from Luca's perspective, right? Maybe if you can provide also a background on what Enyme does, and then providing the same, you know, view from your perspective, because it's a slightly different thing compared to more institutional. Yeah. Sorry.
Yeah, absolutely. I think in my daily conversations with institutional players, I've seen a change of pace or an inflection point after FTX. That was very obvious to me, and curiosity turned into actual questions, or actually saying like, how can we do it? How can we make this happen? I mean, remember first time we had conversation with Markus back in September 2022. Oh no, actually it was like after FTX, so it was probably like November. And then we started really like thinking about like what are the actual showstopper and how can we overcome them, you know? And one of these first questions is, how can we actually make sure that we have a travel rule compliance in place, an AML compliance in a DeFi, in a DeFi swap? And that was actually an interesting question. And obviously, from being from the infrastructure side of DeFi, then it's a challenge of like, how do we make this happen through smart contracts? So how do we ensure in a deterministic way that this is exactly the way we meet these requirements and we comply? And that's where, I think speaking not just for Enyme, but I think speaking, rooting for the DeFi ecosystem as a whole, I think we're really good at, tackling really concrete challenges that are posed to us. So this is how we went out. We created solutions that then, allow players like Sygnum to trade with known counterparts, for example. So using like a 0x integration. They can trade with a player, they know who they are and then they're KYC, and so on. Swaps that are not done in a anonymous pool on AMMs. on 1inch or Uniswap, but they're done with a known institution. So this is the kind of solutions that as an infrastructure provider, we can work towards. I guess what my ask to institution is come with your questions, make it as specific as possible, and we will work as hard as we can to find solutions.
Michela, yeah.
Adding on the set of trends that my colleague was speaking about, from a CeFi perspective, I see that we are going to see more of hybrid products, the combination of CeFi and DeFi, and it's already happening. Many exchanges are already doing it. I would like to say Binance is going to also offer very interesting things in the next few months. And the reason for this is, and attention to this, because I do think it's a focus of the whole appetite, is people want the returns of DeFi with the safety of CeFi. And this is the main trend behind those hybrid products. Personally, I do think that that's going to be quite interesting in 2024. Then the second thing, and I'm seeing this from the perspective of quant funds, the majority of quant funds that are working currently with, they are starting to deploy very interesting strategies in DeFi. 2 years ago, it was all about strategies on centralized exchanges. But it's quite interesting to see how every month that passes by, they are deploying those strategies in on-chain, and they are very profitable as much as CeFi. So we can see also that on perspective of institutional volume, more and more asset managers are also transitioning to this sphere. And it will be interesting to see what the centralized exchanges are going to offer in terms of security and in terms of product offering to all those quant funds that want to deploy their decentralized strategies. Again, I don't know if many of you would like to add on this, but I do think it's going to be very interesting to see. Most of the institutional volume, as you might know, is done now systematically, or I would like to say that's my opinion on the matter. And yeah, I do think that DeFi has a big role to play in the next few months on this.
I completely agree. And Fabio, from your perspective, from an investment perspective, both on the, I assume on the liquid and illiquid sides, have you seen, like in the last years, some interesting projects, on the institutional DeFi space, or is this more like a consortium of institutions that work together to do something on their own, basically? Yeah.
Okay, I'm actually I can give you the, let's say the VC perspective like you have, but I think that I'm kind of agreeing with Markus. We don't see a lot of institutional DeFi so far happening, and for different reasons, like security, fees, lack of liquidity in the DeFi world. I think about something that we like very much, that we bet early on is perpetuals, decentralized perpetuals. Great stuff for retail investors or for, let's say, crypto native investors, whether they're institutional or not. But the fees are definitely higher than in a centralized exchange. And the big advantage is that there is no KYC. So that's one of the things that are not particularly of interest to the institutionals. I also think that, on the other hand, I also agree that the fact that we have to differentiate between institutionals and which kind of institutions we're talking about. Very active, very large hedge funds, above all US hedge funds, have been very active in the decentralized world. They have actually attacked several protocols. They've made a lot of money out of that. And but those are really, we're talking about hedge funds that have basically no limit on what they want to do, and it's not clearly not the clear traditional finance that we can imagine of. But in the meantime, the interesting thing is that there are some protocols now that are becoming large enough, solid enough, with a reputation good enough, that are developing products for institutionals. I'm thinking just a couple of examples. Aave is building something for institutions with Aave Arc, and Aave, I think, has got a reputation so big and so important that it will be trusted, and they are very good in deploying their capabilities and showing what they can do. And the other one, obviously, is MetaMask Institutional. I have no data about how much MetaMask Institutional is used, but clearly they're pushing all the possible leverage to get to institutionals. And I think that when you have products that are so much battle tested, institutions will come. I think that first we will need to see institutions coming into the like the most normal products, like maybe perpetuals, maybe simply trading on the centralized exchanges, and we will see them developing more expertise in a later stage. And I also think that, I mean, VCs, specialized VCs on DeFi, on staking, on lending, could be a good venue for institutionals to deploy their money and not taking the direct responsibility. So that's...
Thank you, Fabio. So now that we, I think, set the context, it would be nice to understand, because you guys obviously come from different companies, what is your company, offering or looking at in terms of institutional, when it comes to institutional DeFi? I don't know, Michela, if you wanna start. Yeah.
At the moment, Binance does not offer a DeFi solution, but Binance Labs is investing heavily on it. So the way we put our hands on projects is basically through our VC arm. I will keep it short and sweet. Any project here present that would like to apply for Binance Labs, do ping me after this, and I'm happy to get them started.
Yeah, Markus, yeah, feel free.
So I think we're looking at it also, basically a bit split in two. What is direct engagement with DeFi and what is rather indirect. So what we're definitely doing is allowing DLT companies and contributors to the DeFi ecosystem to grow via financing, via equity, but also lending activities. But also we're engaging in institutional grade staking. As I said, tokenization. We're working on asset management solutions. We're engaging really to try also maybe to be close to DeFi native companies to bring the other part of the equation, because there are some flaws in DeFi, and maybe there are some limitations still, and we need to go further. But I think large part of the reason why DeFi hasn't been experiencing a second summer yet is also maybe not really at DeFi. It's rather about, who should be interacting with DeFi. So how can we give comfort to the ones that we would like to have in DeFi? It's about also talking with regulators, talking with clients to really understand what their burden and what their hurdles are to maybe work on that side, instead of just thinking about what DeFi can do. And then there's one topic that we're trying also to help with to some extent, with bringing investment volume to the market, and not just arbitrage or market neutral type, but really sticky money that stays in the market and provides liquidity just to be there and to help make the ecosystem flourish. That's one way of also allowing for that and being basically the sparring partner for more DeFi natives to really bring the other questions on the table and help solve them. And that's what we also did with the Enyme on the POC, right? We went there and said, what does Enyme offer across the board if we would have a white piece of paper? And what do we need to cut out now to have a solution to make one step, instead of saying we don't even try it because we cannot get all in once, right? And that was just getting a bit closer, showing that it's possible to achieve some things, and then making the next step, because it needs time, and we will find somewhere in the middle and then move it further to where we actually want to see it over time.
Thank you, makes sense. What about Gemini, Ekaterina? Yep.
So obviously the exchange does list multiple DeFi tokens, and I'm happy to share some sort of our roadmap. Our staking product is live in the US. Staking Pro is now live in the UK, and hopefully we will be launching by the end of the year in Europe as well.
Thank you. When we speak about institutional DeFi, I think I would be curious to understand, from you, Markus, from your side, like what are the main challenges that financial institutions, see when they basically try to adopt institutional DeFi products? I think, and the ways to help them, support them to, overcome these issues. Yeah.
Yeah, I think, look, the most obvious probably would be to say it's regulation, and it's definitely one important part. But also, I think, if you're engaging to bridge some sort the traditional money with the new money and, TradFi with future finance, it's also about, for example, readiness of your business partners, right? It's technological compatibility. Sorry for struggling. It's also a lot about mindset, and I think that's what I'm like to point out. I think there's a lot behind not really what DeFi makes wrong, but what are other elements about it. And when I look into how we deal with such issues and topics, it's really about bringing those factors together and allow for a way, which is maybe not the perfect yet, but really closer to where we want to go, and just connecting the dots in a sense, and not searching for regulation, always be to blame, but really find solutions for it.
May I build on that? Okay, so I would point out 3 challenges that the DeFi ecosystem needs to solve before we will see bigger institutional adoption. If we take a step back, all of the DeFi projects, a majority of them, they were built by crypto enthusiasts for other crypto enthusiasts. They were not designed to serve the needs of institutional investors or TradFi institutions to comply with KYC, AML, etc. So what needs to be solved is firstly, KYC, AML requirements. We need to figure that out, and we can touch upon that in our questions about permission versus permissionless DeFi. We can talk about our ARC, etc. Second thing that we need to address is cybersecurity. So according to the Chainalysis report from last year, 97% of all the hacks that happened in the crypto ecosystem, these were the hacks into the DeFi protocols. We really need to work on that.
Yeah, with one only FTX that was counting for most of everybody else.
Good point, good point. Good point. And then thirdly, whether we're serving retail investors or institutional investors, we need to think about consumer protection. So we've seen that the centralized exchanges, like Gemini, for example, we've done so much work to be compliant with the regulators, and I think similar approach needs to be taken by DeFi projects.
Thank you. What about Enyme, Luca? Yeah.
Actually, maybe I want to address some of the points that Katia was raising. Definitely KYC is something that can be complementary to a DeFi protocol. I mean, smart contract, they should be doing what they're supposed to do, which is smart things. And one of the things that, for example, Enyme does is whitelisting addresses that are capable of interacting with a certain vault, which means that you can effectively associate that whitelisted address with a known person or entity, which means that effectively you run a compliant KYC. The other thing that you were addressing is cybersecurity, which is a very fair point. I would also say that also depends on the so-called Lindy effect of certain protocols, which means that the likelihood of let's say the life expectancy or like the security of a certain protocol also depends on its age and how time tested it is. So obviously the choice for institutions should go to those that are the protocol that have been on mainnet for the longer time, that have a history of strict auditing, that have a history of not having any vulnerability. So that's definitely an important thing to consider while choosing where to start. And the last point, I think I missed that, but
consumer protection, how do we protect investors? There is nobody you can call, you know, if something goes wrong.
Yeah, and I think that, you know, like, if I think about that, like having some institutions like Sygnum that, you know, sort of take the lead and do something, then they, you know, sort of create those solutions using smart contracts and combining some of the policies that you have on smart contract with the role of, you know, the leading role that an institution does. I think like having the combination between like a non-institution that uses the technology simply as a technology provision, then can actually be that kind of point of contact for clients. And I think that's good to see.
And look, actually on this, and related to this, what are some of the key design choices in your opinion? You probably mentioned them, some of them already, but like when institutions need to really think about implementing, you know, DeFi solutions. Yeah.
Yeah, I think I mentioned a couple of them. Like one that we implemented was this this ability to interact, you know, with known counterparts. So that was definitely a design choice that we made to comply with AML and travel rule. I mentioned the whitelisting of addresses. I could mention more things like, you know, you can use policies in different ways. A smart contract need to be flexible enough to accommodate also some of the points that were raised there. So I think like smart contract need to be flexible enough to accommodate both the crypto native use cases, because you don't want to scare them off. You actually want to track those too, but they need to be flexible as well to accommodate for more institutional. And another thing that I can mention is like even policies for like minimum deposit. You could say if somebody doesn't come with a minimum of 100,000 USDC, they cannot use this specific vault, which means that effectively you are only working with accredited investors. So these type of things that can be encoded in smart contracts are an example of how the infrastructure can play a role in facilitating and enabling compliance. And I would argue that once you use smart contract in a really a smart way, then auditing becomes much easier. It becomes almost, you know, so easy to perform that it's arguably superior to like traditional finance.
Markus, what about on the Sygnum side, alongside of what Luca said? Yeah.
Yeah, you know, I think when we were starting with specifically, let's take this on-chain asset management proof of concept that we went live, it was actually about basically a make or buy decision, because we said, you know, if we do something, we need to work with the best specifically for that issue, for that problem. And we said, you know, we are not the DeFi specialists in our house, but we would like to connect our clients potentially to DeFi services. And then it's just a choice about taking the best possible parts and bringing them together in a meaningful way. And I think just at the end, also
next, I think it's like $1 million question for Fabio starting. Permissioned versus permissionless protocols. In your opinion, it would be nice to have everyone's opinion here, like how do you see the two and what are mostly the main driver for choosing, I think, for institutions? Yeah.
Yeah, I think it has already been touched a little bit by the others, but I think that, yeah, clearly, I believe that most of the institutionals would not go in a fully permissionless environment. And you need, I mean, assuming that we are multiplied by 100 the volume that are in DeFi, we will need, like, I believe, permissionless blockchains with app built on top that require whitelisting, as Markus was saying, and in any case, KYC and AML. So this is the fundamental condition, I mean, both for the platform to operate with the institution and for institutional to operate within the boundaries of laws, with the with the protocol. So I think there is no other choice. Even the 100,000, like accredited investor target, is kind of, I mean, in the crypto world, there are a lot of ways. There are not accredited investors that have way more than 100,000. So you definitely need to identify the people. I just wanted to mention one thing, if I can. I think the future for DeFi to become really big is like to get the biggest share of the pie in CeFi. And today, the way biggest share of CeFi is options. And we will start seeing decentralized options protocols with cross-chain liquidity that will provide a lot of opportunities even to get options with very small tokens. So I think we're just at the beginning of evolution, but I think it will be, I mean, as everybody said, FTX was really a big setback, but people will come back. There is a lot of interest. Maybe DeFi is still a little early for institution, but I start experimenting a lot with CeFi, and then they will learn, like us. We started with Binance, and we end up now 90% of our trades. We're not traders, but 90% of our tokens are sold or bought in decentralized exchanges.
It's quite fascinating because from an investment perspective, actually, we see a lot of permissionless protocols raising money, and it's up to the DeFi institutions to understand if they want to say, okay, let's say copy paste the tech and we do a permission version, right? Or we basically leverage the permissionless for a specific layer, and then they build on top, as you're saying, something they can control from a regulatory standpoint. What's your view actually on the more like institutional side on Michela? Yeah.
I'm just putting myself in the shoes of an investor, right? And their major point is security. But being permissionless is extremely exposed to exploitation in several ways. The first thing that I think that permissionless must solve is, as I said, how do you protect your ecosystem, right? And how do you protect your investors? Because that's the number one thing. Yeah. If that's the case, I do think that permissionless ecosystems are going to be more profound for the industry than permissioned. But at the end of the day, those are the main questions that must be solved. I also want to build on what you said about cross-border, cross-exchange liquidity, and I do think that that's going to be one of the main things that Binance is looking as well in the next few months. How can we work with DeFi exchanges, small DeFi exchanges, and also improve the way we interact with other industry players? There shouldn't be DeFi here and CeFi here. It should be a combination of both. At the end of the day, many DeFi protocols, or at least that's what I have seen, the ones that do not take advice from mentors or good mentors in the space, they're trying to build without taking into account existing frameworks. They're trying to build their protocols, trying to go against centralized exchanges just because of what happened with that big exchange that I never like to mention, by the way. But yeah, why not taking the best principles from CeFi and enhance them on DeFi? Even us in centralized finance, I don't know if you have seen the same, but when we build the structured products, we don't build them out of nothing. We build them with the same principles that we have used in TradFi. So DeFi should ultimately, I would say, follow the same principles. You can go against me
if I may, I think I'm kind of different. I'm a strong proponent of decentralization. For me, blockchain is about decentralization. I think we're lacking technology, but I don't think that by nature decentralized finance is more dangerous than centralized finance. I think it's a matter of design and it's a matter of what you build, and I think we'll get there at some point because there will always be people that want to have like the bank, the exchange that holds their money, and there will be people in the future that will have tools that can securely keep their money in a safe and can interact more quickly and rapidly with DeFi protocols. And so there is always like, you know, some people want the money in the bank, some people don't trust the bank and they put it in their safe in the house. They take full responsibility of the risk. So I think, but I think it's not by design that this DeFi is more risky. I think also CZ said that the Binance is too big right now and we need to build a more decentralized future, right? So I believe it's really true. But we need much better decentralized finance, but it started in DeFi summer. We had a lot of fun, but we know how it ended up.
A lot of name of different foods in protocols. Yeah.
If I put a product hat on, I like to mention that you should be building products to meet your clients where they're at now. Not try to build something that could be adopted in 5 years from now or 6 years from now. Because by the time you are ready to go to market, what can happen is that you either run out of money if you're a new project, or you lose relevance. That is to your point about all the new projects asking for fundraising, you know, from you and other VCs. And in my opinion, this perfect DeFi solution would seamlessly blend the freedom of innovation, the permissionless narrative with the safeguards that you would expect in traditional finance to protect your investors.
Yeah.
Just when listening to the discussion, I was thinking about, right, we say, is it permissioned or permissionless? Is it DeFi or CeFi? You know, we also, and what you said, Michela, you know, we have to connect the dots and make it happen together where the clients are right now. And that means maybe we have to think again that, you know, a growing pie, no matter what the client need is and how we match it right now, is a better solution than working within the same size of pie and discussing whether it's a bit better on that or the other part. But just bringing the solutions in the best way together right now, there will be client needs that are matching, you know, across the spectrum of solutions exactly to the needs that are around right now. And so combining those and make it a growing pie together while maybe giving up some of the excitement that we have for the next couple of years while making some things happening right now can be a very successful way to give it another wave in DeFi also.
Yeah, thank you. Luca, anything to add? Yeah.
I would just want to add a thought that for me, the question you pose assumes a dichotomy, which is a false dichotomy for me. There doesn't need to be permission versus permissionless. I think like the design choices of protocols can and I'm repeating myself, I already said that earlier, but I think I want to stress it again. The design choices dictates enables the possibility of accommodating both permissioned and permissionless use cases in the same place. And therefore it is then up to the user to decide the way they want to configure a certain smart contract interaction. So I think that in the future, I think more and more we will see DeFi protocols that have a totally permissioned version of configuration, which is for institution. They will have a totally permissionless and native Web3 configuration, which is for crypto native and degens. And I guess there's also going to be a sort of hybrid, which I think is emerging, but will probably emerge much more. AI will also facilitate like knowing, like adding privacy and compliance at the same time. There's a paper from Vitalik and some researcher from the Basel University that just came out. So having these elements where you combine the best of both worlds and you use technology to embed compliance and have a smarter way to manage it.
Yeah, actually, just to add on this, one thing that I found very interesting. So when I look at compliance, for example, I remember I saw two projects in the past, or actually two approaches. One is more like compliance at the entity level, like you trust the institution, and one is the compliance at the asset level. So I know there are some companies that basically, for example, you give them Ethereum or other tokens, they wrap them and they create a compliant version, and then they can also basically open pools in Uniswap just for that wrap token, basically. So that's a different view, and I think that's very interesting, and it would be interesting to understand where and how this will play out in the future. So a lot is happening, actually, I think, on the VC side for sure, in that realm. And just to end, like, it would be nice to maybe, speak about a couple of names or a couple of projects that you think are proposing something very interesting. I think, Fabio, you mentioned some before, like Aave, but like in the realm of institutional DeFi and DeFi in general, projects that are getting traction and yeah. Yeah.
The projects that in DeFi are getting traction, or institutional DeFi are getting traction?
Yeah, or institutions are looking, or in general DeFi projects that got traction and are likely to get like an institutional offering somehow. I'm thinking about Aave, as you mentioned.
Yeah. Aave, MetaMask institutional also is doing great advancement on that. I don't have any specific, I think it's really, really early. I don't have any specific project that comes up to my mind. I think we have to assume that when there is the interest, when the interest comes back from institutions, we have to assume that people will build more and more. And as Markus was saying, it's just it's definitely. It's not about permissionless or permissioned in order to have DeFi, right? You can have both, and you can have DeFi. Permissioned is required by institutions. It will be always required by institutions. And the easiest example for me, in any case, is you need custodians, and you need solutions for like the easiest and most simple DeFi use case is Ethereum staking, right? So a lot of people have done it, a lot of people have not done it, because people are scared to give away their assets, and if something happens. So I think if you think of this is a big use case that needs to find a solution, and as soon as this happens, staking of Ethereum will be an obvious thing to do.
Yeah, and I think alongside what you were saying before, there are very large institutions, like on the traditional side, right, that are playing with like DeFi, either with their own balance sheet, right, or for example, like even setting up funds that are quite large. And there are also some large traditional trading houses, like Jane Street, right, Radix, and other large ones that are also...
Those were the hedge funds that were mentioned.
Yes, that are also playing and, investing alongside other VCs and other institutions as well. I think we still have 5 minutes. Feel free to.
As a centralized exchange, of course, I'm closely watching what is happening with the decentralized exchanges. And as I mentioned, there was this massive outflow of capital from centralized exchanges following the FTX collapse, and inflow of capital into decentralized exchanges at some point. And as I mentioned, Uniswap at some point surpassed Coinbase in terms of its trading volumes. But a year later, I think that what makes a decentralized exchange successful is exactly the same thing that makes a centralized exchange successful. And we're talking about narrow spreads, deep liquidity, and a long list of tokens that you offer.
Yeah. I think we may have 5 minutes for 1 or 2 questions, if anyone wants to.
Hello, my name is Dennis. Thanks for the great panel. My question is regarding interoperability and cross-chain problem. Since a lot of institutions are now exploring DeFi as well, and institutional grade DeFi, but what we see, like, we entered for sure a multi-chain era, and different institutions, they choose different blockchains like Corda, 3 or Hyperledger, or Polygon Supernets, for example. So not even EVM based. So we see a lot of friction, but that is quite obvious right now that we are going to live in this new multi-chain world with hundreds of blockchains with a different stack under the hood. So what is your opinion, what is the best maybe way how we can mitigate these frictions if we're talking about entering the institutions into the DeFi market? Yeah. Thanks.
Yeah, I think this is really an infrastructure question. I'm actually coming from Barcelona. I was over there as Marcon. Are you from Chainlink? So yeah, I heard a lot about CCIP, and actually our CTO was part of a cross-chain messaging working group set up by Uniswap. So definitely we are looking at how DeFi protocols can use this layer of interoperability to have things like, I'm running a long strategy on Ethereum mainnet, and I'm running a short strategy on Arbitrum perps. So that's the kind of thing that will be enabled through this layer of interoperability. I think it's maybe a little bit early for us personally, for Enyme, but we're closely watching at this, and definitely we're getting a lot of requests for this type of stuff. You know, like, hey, I would love to have the security of layer 1 for my main holdings, but I also want to run some capital efficient shorting strategy on an Arbitrum, for example. So yeah, it's going to come for sure.
Yeah, it's a really interesting question. I totally agree. But also, you were mentioning Corda. I think basically there will always be a big divide between public blockchains and private blockchains, and I don't think that private blockchains will ever be able to offer this kind of like the offering that comes from the global market. And it reminds me about internet and intranet. There were companies wanted to build intranet because internet was not secure. Now we will get public blockchains very secure, I'm sure.
Hi, thank you for the panel. My name is Ranjit. I have a question. What are your views around the regulatory uncertainty around DeFi, especially in the horizon of next 5 years?
I think there is a right progress being made. And the progress is being made by centralized exchanges right now, putting a lot of effort on building the right frameworks. And those frameworks are going to be the roots for DeFi as well. I will say that I've never seen such progress in regulation as in the last few months. And this just sets the tone for the year ahead. In terms of how fast can regulation come for DeFi, I will say we need to first close the first chapter, right? Which is also the regulation for centralized exchanges. We're trying to build one layer without building even the first.
Yeah.
But am I positive on it? And do I think that a lot of progress is being made? Absolutely. I don't know if you would like to build up on that. Yeah.
Well, thank you very much, everyone, for the panel. Thank you.
Thank you.